Hope you guys had a great Fed day. I mean, it's very rare that the Fed day gets overshadowed by any other event during the week. However, this week I would argue that the Fed day is probably going to be the third most important thing on the calendar, because obviously the unexpected DeepSeek sell-off on Monday, and we're gonna have the big tech earnings. I mean, Tesla, Microsoft, and Meta reported today. Apple's gonna report tomorrow. So there's a lot going on in the market. Bank of Canada also cut their rates by 25 basis points. So without further delay, let's get into the important market updates now. So, I will start off with the FOMC presser, and I think it can be encapsulated quite well, at least the monetary aspect side of it, by two quotes which are illustrated in this AI generated image of Chair Powell. The first one being the fact that despite the fact that the Fed has cut rates by 100 basis points over the last 4 to 5 months, rates are still meaningfully restrictive but not highly restrictive. Now, what does this really even mean? It means that rates are above their neutral rate, but at the same time, the Fed's not going to be in any hurry to cut rates. The reason being that they still want to see more progress on inflation, because despite housing inflation having trended in the right direction, inflation is set up for progress towards the 2% mark. But it does not mean that just because it's set up, it will actually happen. So, all in all, I hope you're getting the gist of this, which is that Powell has basically threaded the needle once again, said a lot of things without saying a lot of things, and he really wants to keep his options open. But if you really ask me what I took away from this meeting, or rather from a monetary policy perspective, what can I say about the next meeting, which is the March meeting? I'll tell it to you simply. I do not see a cut happening. Why, you may ask? How do you say it with even a decent degree of confidence? I think there are two reasons for this. The first being that when he was blatantly asked, Powell said that the committee is in no hurry to cut rates. So I think this goes to show that he really thinks that economy, labor market is in a good place right now. It's steady. He said it himself. And inflation, while in the right direction, hasn't done enough. And the Fed never wants a reflation kind of situation. That's really their worst case scenario. But I mean, all this could be invalidated if we get a very weak inflation report or labor market report. But I do not see that happening, because we have to account for the seasonal fact that inflation is expected to not be that good in the next couple of months comparatively, because seasonal effects both in 23 and 24 showed a slight reflation in the first quarter. And even with the labor market, I think everyone knows that the non-farm payrolls is notorious for overshooting estimates for the January portion. So I'm not seeing the chances of a weak labor market report there. So I think all in all, the chances of a cut are much higher. Just a side note, the market was pricing in a 31% chance for a rate cut before the meeting. Now it's at 22. It had gone down to 18 right after the meeting, but it's a liquid market, so things keep moving around. But the 10 percentage point drop is indicative that even the market thinks that it's probably not going to happen. And barring surprising data over the next couple of weeks, if that does not happen, don't be surprised if this 22% hurtles down towards a zero and we get a second hold as well. Now, enough about the Fed and on to tech. Big tech earnings have undoubtedly been a major reason of US stock market outperformance, arguably because they are at the forefront of innovation, and with the advent of AI, this has become even more clearer. However, this week's big tech reports are going to be looked with even more scrutiny because of the um, all important DeepSeek debacle that really made a dent in the valuations of a lot of companies on Monday. Having said that, Meta really did well in the earnings report. They overshot not just the revenue but also beat their earnings per share by $1.29, which is amazing. Like, I cannot even state how great that was. I mean, it's a good reason why the Facebook stock or Meta stock is up by more than 2% in the post market hours. Meta was pretty straightforward. Earnings did well, that's why it went up. Microsoft, on the other hand, they did beat on revenue and earnings per share. But if you look at the stock, it's down over 4% in the post market earnings. Why? Is because cloud computing is very essential to the future prospects of the stock. And with the PE of around 35, if I'm not wrong, any slowdown in the growth of cloud computing, which is what they reported today, is not a good sign for the market, which is why, despite the earnings beat, the stock went down. And lastly, coming back to Tesla. Tesla had their earnings, and right the moment they put out their earnings, they missed their revenue by 8%, which is pretty bad actually, which is why their stock was down almost 4 to 5% in like right after the earnings. However, they did mention that they made a lot of progress on Optimus, as well as they also mentioned that in Q4 a good amount of their autopilot technology was used to drive more miles than ever before. Now it's completely the opposite case of Microsoft. They missed on their earnings, but they they had good future growth prospects. So at least investors are perceiving it as good, like they're on the right track. So that's the side of the story from big tech. Now, enough about what happened today. Let's move on to upcoming events for tomorrow. Yeah, for tomorrow we have four major events. The first being, and I would argue the most important for tomorrow, is the European Central Bank interest rate decision, 8:15 in the morning. Economists estimate is a 25 basis point cut. The market is actually pricing a bit more than 25 basis points, but I mean, we can take it for now that the market is basically pricing in the cut entirely. Market reaction function would be focusing on both growth potential without tariffs and with tariffs. As with Bank of Canada today, we saw you can make all the great projections that you want. If tariffs are implemented, all of them are thrown out of the window and you got to start from scratch again. So that's the thing for the European Central Bank. From the US at 8:30, we get a key piece of economic data, which is the first estimate of the US GDP quarter four growth. It's 2.6%, which is a drop since last time. I think the market is also pricing in a number like that. If you notice that we got a few weak CPI reports of late and a weak retail sales report, maybe that would filter in. But it's also important to note that October and November were relatively strong for the US. So there's a chance that we could overshoot this number as well. And if we do, it would indicate the American consumer is still very resilient. US yields and dollar would rise. Equities may actually drop a little bit. So that's the thing. Initial jobless claims is there, but in my opinion, it's not as important because Powell clearly said labor market barring a shock indirectly is now in the back seat. Inflation is in the front at the moment, and economists expect 220K. I mean, nothing much to see really here unless there's a big miss. And all these events are in the morning. Now, the next big event is after, at the market close, which is Apple earnings. Now, Apple has fallen a bit out of favor, but it is important to note that after Nvidia's huge drop on Monday, it's the most valuable company in the world. And with all the tariff news that may come or may not come, Apple has a very physical hardware business. They still produce stuff all across China, India, and many other countries. And how they navigate tariffs and their strategy may also be discussed in the earnings call. But I think for the moment, the biggest interplay would be between iPhone sales and services. iPhone sales may have slowed down in China. That's what analysts are saying. But their services business is so strong that it can overpower it. And with all the advancements in AI, Apple Intelligence had a weak opening, but there's a good chance that we could get some new reports on the fact that they're developing something new for customers, and that could really help it. As with today, we should realize that let's not be too anchored to the earnings per share and the revenue. Sure, if they beat it, great for the stock, but if they don't, there's still a hope with the future estimates and the future prospects for the growth being great. What I'm really excited to know is that Bloomberg yesterday released an article on the SpaceX front, on the Starlink front, that Apple is secretly working with SpaceX and to basically get Starlink on the devices. If this is confirmed tomorrow, I think it would be great news. How much will impact the stock, I'm not sure, but you can be assured that Twitter is going to go on a frenzy for a while. So those are the most important things for the day. And Before I close out, I will talk a little bit of my current trades. After all of this, you may be wondering how am I positioned. For those of you who are my Substack subscribers, you know I entered a long USD Canadian dollar position. The Bank of Canada stance really weakened the Canadian dollar in line with my expectations, and we went to around 1.448, which was much higher than my entry point, which was great. But after that, the market did, the USD CAD did sell off, and we had a second bump after the statement of the monetary policy was announced for the US, which was rather hawkish, and it moved up. But as discussed, Powell's press conference didn't really match up to the hawkishness of the statement, which is why USD CAD did drop a little bit. But at the moment, it's in a range of 15 pips to 30 pips above 1.44, and it's struggling to break out of that range. So maybe I think the next break that we're going to see is tomorrow at 8:30, when the US GDP numbers are announced. I'm still going to hold on to the trade, although it's in a profit. There are risks. I think inflation is on a downward trajectory, and Powell wasn't as hawkish as I had predicted. So there's a good chance that the trade doesn't work out. But I think the upside potential is great. For tomorrow, I think there's a higher chance that the GDP number would be exceeded rather than it falls short, because I think October and November were very strong months, and it would be, and December's rather weak retail sales I don't think would overpower it. And I think US economy is in a good place, and that should be good for the dollar. And also there's like one edge case where Trump's tariffs for Canada are still on for 1st Feb. That's what they're saying. The extent of it, I really don't know. But if it actually does get implemented, there's a good chance that the USD CAD jumps even higher. So that's one reason I'm going to hold it. I will do a reassessment tomorrow based on the US GDP numbers, because PCE on Friday could be a bit weak. And I don't know if I want to be on the side of the trade for that. So it depends on how good GDP is tomorrow and where the price for the pair is tomorrow. But that's my game plan ahead. I really hope you like this video. This was one of the first few that I've done in this format. And for those of you who really don't have the time to maybe spend 12 minutes, or don't like the video format, or maybe want a bit more in depth of a written script, you can go to my Substack. I've already released it. It's in my description down below. You can subscribe entirely for free. And if you really like this video, I mean, you can share it with your friends, and you can also like the video and subscribe if you want more content. Subscribe to my Substack as well. Those do come out a bit early. Anyways, have a great day, and those of you trading the euro, hope you wake up on time for the event. Anyways, have a good day. Bye.